Hello everyone, thank you for checking out tonight's video. Today's is September 4th on a Wednesday, 2013. Let's get right into these charts, guys. Let's start off with the SPY. This is primarily what I like to go over, and this is what I usually want to make sure that you guys are all seeing what I'm seeing on the SPY. And along the way, I'll go over a few major stocks and indexes. But primarily, I want you. These videos are really for the SPY and kind of seeing exactly what I'm seeing in the markets and the direction of where we might be headed. Okay, guys, longer term, short term, all that good stuff. So let's get right into the SPY. Let's dive right into it. I've been calling out since a few days that we're gonna just pretty much float sideways. Let's see if we can make that a pattern, a bearish pattern, into a death cross. And guess what, guys? We did make that death cross today. I would like it if we actually went into it, because that would actually give a pretty good decent setup. Okay, because this is a nice, the angle is pretty decent. I mean, it's not a V-shaped bounce where that's very strong. This is more of a kind of a bearish consolidation. That's I kind of like the pattern right now. It's actually almost into that death cross. As you recall, you had one here as well. We didn't quite get to 20, but now you're actually almost. This could be an in spirit kind of a touch kiss of that area. It also is a gap fill. Okay, guys. So off this gap down, retraced it with 6 bars. Okay, guys. If you guys know time counts, that's pretty close to a time count. I can't really give away that proprietary information, but 382 retracement off of Fibonacci gap fill. That is pretty decent support, a decent resistance. I'm sorry. And I did play this as an intraday play for a nice, beautiful scalp. Played out beautiful. It did take longer than I anticipated. It did look like I was building a base to go higher, and it did fail ultimately. It did kind of make it poked its head in there, made a nice little base, high base here, and then it kind of poked its head up a little bit, and then it actually never even took out this high. But so it is still in this nice range. Okay, they saved the markets here above the VWAP, so they did hold out the previous. They held above, price held above the previous breakout here, so it's still in a bullish mode, even though it's below the 20 moving average on a 10-minute chart, guys. I'm sorry, I switched over. This is a 10-minute chart, guys. So this is a 10-minute intraday chart. Every candle you're seeing is 10 minutes. So we did have a nice gap down on Tuesday, I believe. Wednesday we traced all the way back up. Had minor resistance here. Yeah, you can't be surprised. Look at the light volume, and we had one pause candle and just blasted right through it. Now we're consolidating in this upper range, and if I pull back the chart, it's always a very important spot on the chart. See, this was the last previous pivot high before the gap down. So this is going to end the gap fill. So this is pretty constructive movement right now. Make a nice high base. As long as it holds this previous pivot high, see how that was support here, and it also seems like it did break out of this. It could look like it's a falling channel. It could be the midst of a breakout here, okay, guys. But it's really tough because on the intraday time frame, it's saying it can go a little bit higher based on what I'm seeing. But look at these two moving averages, okay? That's going to keep this market in check right now. Dual moving averages, death cross. You're into somewhat of a time count. Let's see what happens tomorrow. That's going to be very, very important, okay? But I do have a measured move. If you do measure out the current intraday pattern, it does say it wants to go up as much as 168. By Friday. So that's my max upside, guys. So if you guys are looking, that's also a 200 moving average roughly. This is a 200 moving average on the hour chart is at 167.40. Okay, that's going to be resistance. And on the daily chart, that is going to be where your death cross is at around 168. Let me actually let me confirm that actually. I'm sorry. Actually, the death cross on the daily chart is actually at 166.30, I believe. And that's actually your measured move. Let me make sure exactly. Hold on, guys. Let's go to the daily chart and check this out. I believe it's 166.30. That's your death cross. So that's going to be definitely an intraday short, in my opinion. If you hit there in the first few hours when there's actually volume, I wouldn't mind. But if we gap above it, it's a totally different story. Okay, we gap above these two moving averages. That will be a nice gap play, and it's free to run into this next pivot high. Okay, guys. So just always watch for gaps. Okay, it's a different story when you gap above levels on a chart. It's always very important. But right now we are having that down move, and we have inside. This is an inside bearish consolidation pattern into a death cross, and also 382 retrace and gap fill. Okay, guys. So look, this is going to be major resistance. Okay, on the daily chart. Okay, on intraday time frame, it could go a little higher. Like I said, my upside max side target is the 618 Fibonacci at around 168. 168. Okay, and I believe that's the open interest as well. It's right around 166 actually, the open interest on the call side. So you would like to think that the institutions are going to pin at the 166 level and maximize their profits. On the downside, on the put side, the max open interest for these are weekly guys is 160, and that's also a major level. That's actually a 75% retracement on the downside from this pivot low to pivot high. So just some ideas to look out for. I am actually in iron condors for the week, guys. I did sell bear call spreads and bull put spreads. So I am actually in iron condor. If you guys know option strategies, I'm looking for the market to stay in between those levels. Okay, 168 and 160. Okay, guys, I actually have puts below 160. Okay, but you know, I think the max downside is right here. This is your target right here. Let me measure out this move. I think it does take. Let me do it quickly, just off. I believe it's actually right around this vicinity here at the 160, 172. So that's the max downside for the week. If this bear flag does play out, and upside is going to be kept in check right now with these levels here. So that's what I'm looking at SPY at the moment. Pretty much exactly what I called for. Let's look over the IWM. Same thing. I think it's below 2 moving averages on a daily chart as well. So yeah, we're just consolidating below here. I wanted to go over really fast in SPY. Sorry for jumping around. I wanted to actually go over the intraday time frame really quickly. Just something to look after. If you guys are day traders, you guys look for this. Remember when we retrace into this death cross before? I kind of mentioned this in my last video too. So you have a down move, but then look at the retracement. It's much sharper. See how sharp that is? That's almost considered like a V-shaped bounce there, and then actually went right into this death cross. That's gonna be resistance, right? But look at the pattern it made. Now it could be the same idea here. I mean, it's not. The bounce is not as severe. It's more of a float sideways, so the angle is better here on this bearish pattern. So let's, but look, okay, back to jumping back and forth. But let's look at the intraday time frame in our chart when it made this pattern here. Okay, this is gonna be important stuff, guys. Just to give me a second, I'll go over it. Let's see if I can scroll back the hands of time here and go back to where it retraced into that death cross previously, and it's right here, guys. So you made that nice V shape right there, and then you consolidated. And look how you made this nice pattern, never closing. This is the key here. You never close back below this green line, which is the 50 moving average on the hour chart. See how it's continuing to uptrend? See how the moving averages are starting to come back up, and it rode it all the way up. Okay, now look at this. Look what we have now currently on this pattern. Okay, it looks pretty similar. Okay, so just be prepared. It did look kind of weak here. It did close, you know, below these moving averages, and then it slowly making a bull flag above these moving averages. So now you're getting a bullish golden cross here. See, so now if this can ride up and catch these moving averages on the way up, it could continue to ride up. Okay, but notice you have the 200. So these are your two reference points on the hour chart, these two moving averages. Which way does it want to proceed? Okay, so if these two moving averages start to curl up and then space, and it starts riding the moving average like how it did over here, then yeah, you can look for it to go see higher prices. See how it did that right here, guys. Let me scroll back once again and see how, like right here, once again, see it never closed below these moving averages. If it started to turn up, broke through the 200 like nothing, and then now it's just riding that new kind of short-term trend, which ended pretty much over here when it started to drop on that gap down. But you know, just as a thing to watch for on the hour chart for sure. Okay, guys, watch if it can stay above these moving averages and ride it like we did about I believe about a month and a half ago, give or take. Okay, I just wanted to go over that really quickly. I was seeing that intraday basis today, so I just wanted to keep you guys updated on that. Let's go to IWM really fast. I usually don't go over intraday stuff, but you know, once in a while I will. Did some nice day trading today, so I don't mind going over some intraday charts. Okay, that gap fill is a great play. And IWM, once again, we're still, you know, pretty much almost went into my level here at the 99, pretty much, or actually the $100 level. That was my first support, and we are pretty much bouncing off that. See how it's holding for so long. I told you that. If you guys look back about a few videos ago, I said the $100 level is just going to be very, very important. 50% retracement, $100 even number, uptrend. So you know, it's been holding for quite a bit. So that call was pretty much dead on. But you know, ultimately, this pattern could peak down a little bit lower, kind of pewter down a little bit lower into this trend line. You also have the 100-day moving average, and that'll be a nice 618 too, as if it pierces through that. So 98, also the measured move coming off this bearish pattern, and these below two moving averages. Okay, let me give you a perfect example how this is not the ideal perfect example of a bearish flag. It's more of just kind of a sloppy consolidation below these moving averages. Let me. I'm not jumping around, but just so you know what these patterns should look like. Okay, ideally this is what they should look like. Okay, see, this is a beautiful pattern on Bed Bath & Beyond that played out today. So you had a nice bearish move, right? And then you have a nice sideways base, bakings for a nice time count into below 2 moving averages. See, that's a beautiful, beautiful, beautiful chart pattern. Look at the volume confirming that pattern as it plays out. Beautiful breakdown. See this? It's just a miracle, just an absolute amazing thing. So this is your down move here. Guys, if you're not seeing it, make sure I draw it in so you guys can see exactly what I'm talking about. And you get a nice tight bearish consolidation pattern with your down move. And you get a nice pattern inside below 2 moving averages. And as it pairs through it, and then nice drop today on Bed Bath & Beyond. So that's ideally how you want to see bear flags play out. You want to see it depends where they form as well. You want to see them, form below moving averages on preferably on a downtrend, downtrending market. Okay, guys, let's look at the Qs really quick. I just want to go over already 10 minutes on the video. Okay, I got a sprint here. Okay, guys, I'm gonna actually speed it up here. Oh, actually, the Q is actually showing a little strength. I believe off the probably back of Apple and Google. Pretty showed a lot of strength today, bouncing off my first support levels. But yeah, the Qs are definitely looks like they're headed towards that double top here. Wanted to gap fill here and pause there, but I bet you intraday it did make a high base, and that's exactly what happened, holding above the VWAP. So yeah, let's look for higher price on the Qs. See, maybe it wants to head to that double top. Okay, guys, let me kind of rush through this, guys. I don't want to go too long on the video. Apple very quickly bouncing off that 20-day moving average. It looked like it was making a bearish pattern, but it looks like it somewhat failed now. As long as it could stay above right here, this current breakout broke above this current previous high. So it looks like it's trading above that now. So let's see if it can. Let's see. Let me refresh the browser. Make sure sometimes I have to close some of these windows before I do these videos, guys. Sometimes my computer wants to freeze up. But let me get right back in these charts as it reloads. Apple does look like it does want to bounce here off that 20, even though this was minor. It's not support that I want to buy though. It's support. Sure enough, that's probably the best play. You never know, what could really happen, but right now it is, retesting this trend line breakdown. So let's see how it all plays out. I mean, nothing really great. More major support, in my opinion, is what is 200 is, because it actually confirmed above that level, and after the previous breakout as well. So it still could be considered a bearish inside bar pattern. If you go, it's a 1, 2, 3 pattern here. It still can come a little bit lower, but it has to break above this right here. So you have like dual moving averages here, dual trend lines here. It's not the greatest. Let me go back, but yeah, it's somewhat resistance here. He had a major pivot breakdown over here, and as you retest that, that will be actually it's over here. Actually, right here. This major breakdown here, consolidated here. For several 2 months actually or so, and then it's retraced back into there. So yeah, definitely that's gonna be some resistance. I think it needs to finally consolidate more. I thought it was gonna consolidate more here under the 200, but I think it needs to consolidate, show some constructive overall. It needs to make a bigger pattern here. I think it needs to consolidate because this is a pretty big move already. So it probably needs to consolidate, kind of how it consolidated here before breaking down. See how it consolidated here for a long time before resuming. I think if it wants to see higher prices, it has to consolidate and let these moving averages start to catch up. Let the 50 cross over the 200, and the chart will start looking better. And the longer it starts to base up here, the higher your percentages are if it's going higher. Okay, let's go over really fast, guys. I might not have enough time to go over all these charts that I wanted to. Google, it did bounce off that first support level that I mentioned. That was the make or break point here, right in my this is my level here, and sure enough, it is bouncing. So looking nice on Google at the moment, bouncing off my support level. Amazon as well, holding above that previous breakout level. I also called that out here, with that trend line, and sure enough, you are getting a bounce off the 50% retracement and the 280 level, which is also the rising 100 moving average on a daily chart. Okay, I think that's everything I want to go over. One of my subscribers, I believe, asked for GSS, Golden Star Resources. I'm not really familiar with the ticker symbol, but I'll go over it really quick and I'll leave with this. Pretty much had a nice drastic fall. I mean, look since if you go on a bigger time frame, you look at this huge drop since 2011. So it is at support. It's a very intriguing chart. So I'm glad you actually pointed this one out. It's actually at a triple bottom. So that's where you are finding support at triple bottom. And if we zoom into the chart right now, let's see. It is in a downtrend on these bigger time frames. Okay, monthly chart, obviously weekly chart, downtrend, but is this the first signs of an uptrend? Okay, it could be, and your first sign I'm seeing that is the daily chart. And the daily chart, look, you do have your golden cross already. Okay, that's one sign, that's one factor, and you've hit triple bottom support. Okay, so that's another factor. Now you want to see like what I said on intraday basis on the SPY. Remember that 10-minute hour chart that I've been showing you. See if it can ride this. Let's see if you continue to ride this moving average here. Okay, that's your sign right there. See, let me make this green so you can kind of visualize it better. If this is your, if we extrapolate the 50 moving average, it should hold this. Okay, and then the 20 should start spacing. It has to bounce here. Okay, guys. Ultimately, this is what you want to see when you see stocks turn around. You want to see them hold the moving averages as they start to curl up. Even the weekly moving average is starting to kind of curl. See, the 20 week is starting to kind of curl up. It's kind of riding, starting to perhaps grind and ride, not grind, I'm sorry, ride the 10 week moving average. Okay, it starts to slope up. Okay, this could be very intriguing spot as long as it makes higher lows here. It made a higher low here, so that trend line also will be important. Let's go back to the daily chart. Sorry for jumping time frames, guys. You got to be able to read all time frames all simultaneously. That's very important. So see how it's making a series of higher low. Let's see if it continues to make a higher low. It has to hold this trend line. Also, this is where it broke out, so you want to see it hold this breakout level. So this is your support number one at currently at the 50-day moving average at 53 cents. And then ultimately, it's going to be support number 2 with this trend line at 47 cents. And support 3 has to hold this breakout pivot. But once it starts closing below this trend line, I actually think it will go down to this double bottom. Okay, so I will say support 1 is here at the 50 moving average. Support 2, which is going to be important, 47 cents. That's where it blasted off on volume, so that's your breakout point. That's important, and if that breaks that trend line, I actually think it's going to find support, minor support here at 44 cents, and ultimately it's going to retest 40 cents. And I think it's going to be in a weak position if it's actually going to test, because you never really hear, I wouldn't consider it a quadruple bottom, but because on the bigger time frame, it's actually spaced apart beautifully as a triple bottom. See how it's pretty symmetrical? So that is categorized as a triple bottom. So if it does kind of if it next few days it does test it, that'll be still considered one hit. So it still could test that tested low again, but be careful. That's your line in the sand. Obviously, if you're long this stock, as this bottom here, 40 cents. So it does look at a pretty intriguing chart. You do have an inside bar pattern, big up move and then retrace all the way back to the 50. So it is a pretty chart here. You have support here as well, and this is where resistance was before. So you have a decent shot. Let's see if this is your first major spot for it to hold, and if price reacts bullishly, it should bounce here. Okay, guys, it should bounce, even though you are kind of making a sideways base, but the level is pretty decent. Okay, and it looks like but keep in mind you are on a downtrend, but it does look like it's recovering. Okay, guys, and your first upside target, obviously would get through these moving averages here. Which should be minor, but your major level obviously is going to be this, where the breakdown right here, the pivot, and then ultimately. Then maybe draw the upside targets as well. Might as well. Okay, so but obviously you have a lot more upside potential. It's a good risk reward because obviously this stock has been decimated the last few years. So it depends if you're longer term, shorter term. Either way, longer term does look good because the stock looks like it's been beaten down really bad, and the daily chart does look like it wants to recover. But these are your short term obvious supports here. Previous resistance. I'm probably your short-term resistance, previous support here. So but these are more for the kind of intraday. But if you're holding to the long term, you have a decent shot here. I mean, this could be recovering. It probably needs more consolidation, but as long as these moving averages start to space apart, I think you got yourself a good trade here. That's a pretty decent setup for now. But watch this 50. You go by day. You don't really know. You can't really project long term. You just have to go day by day and see how the chart patterns play out. As long as I'm pretty bullish to neutral to bullish, as long as I can hold the 50-day moving average and bounce. And then you go day by day. Okay. I hope that helped. It's 18 minutes on the video, so that's usually a little bit longer than I usually go over these videos. So, if you guys have any questions, comments, any trading ideas, to let me know what time frame you want me to look at. Are you a long-term trade or short-term swing trade? Let me know. I will go over the chart. That way I can kind of just isolate it more so I can kind of see exactly what you're looking at. Okay, I'm going to call it for the evening. It is a beautiful day, beautiful trading week. I will update you guys probably by the end of the week, but beautiful profits so far for me, just selling bullet put spreads and iron condors. So awesome. I will talk to you guys next time. Have a great night.